Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The gold rout easing after suffering its biggest intraday drop in more than 12 years, while Asian stocks fall as the equity rally on Wall Street shows signs of fatigue. Donald Trump says his meeting with Chinese President Xi Jinping may not happen as the trade deal deadline approaches. The US president also casting doubt on a second meeting with Vladimir Putin. Plus, L'Oreal reports disappointing sales growth, citing weakness in the US. We'll bring you UniCredit and Heineken earnings next. A very good morning. We kick off the programme with earnings out of Amsterdam from the Dutch brewer Heineken, of course. They say that their third quarter adjusted net revenue comes in at 7.3 billion euros. The expectation was for 7.36 billion euros. So an ever so slight miss there. They see full year adjusted operating profit at the low end of 4 to 8% growth. They expect volume to decline modestly for the current year of 2025. And they see organic operating profit growth at the lower end of 4%. So those results just coming in from Heineken. We had a Morgan Stanley analyst saying that pretty much everything that can go wrong for Heineken has gone wrong in the third quarter. But these numbers not looking too bad. We've had a redhead just now in terms of organic beer volumes falling 4.3%. The estimate was for a fall of 4.52%. So not quite as bad as had been expected. We also have breaking earnings out of Milan from UniCredit, kicking off European bank earnings season. Revenue for the third quarter coming in at 6.17 billion euros. The estimate was for 6 billion euros, so a beat there. Net income of 2.66 billion euros. The estimate was for 2.39 billion euros. Again, a beat there. And net interest income, of course, all important, coming in at 3.37 billion euros. The estimate was for 3.39 billion euros. So an ever so slight miss when it comes to net interest income. But of course, the Italian government's been mulling windfall taxes on banks in recent months. M&A remains an important theme for European banks, even if UniCredit has abandoned its M&A ambitions on Banco BPM. So we keep an eye on European bank earnings. We've just had the first one, though, that coming from UniCredit. Let's check in on these broader markets. We come into Wednesday with stocks near all-time highs, but futures pointing lower here in Europe. Higher, though, stateside. We've already seen some sign of the fatigue in the Asia session. The MSCI Asia Pacific Index down 0.1%. And if we flip the board over to the cross-asset picture, the top story today has to be in the commodities space. We've seen steep losses for gold and silver yesterday, the biggest intraday decline in more than a dozen years. And it has been this ferocious weeks-long rally. So traders taking a bit of profit. Gold steady now. It's up a touch at $4,129 a troy ounce. But the question remains, is this bull trend done? Now, partly the sell-off had come as the dollar rose on positivity around the US-China trade talks. We have euro dollar up today at a 116 handle, and we have oil up for a second day as President Trump has stressed that India would wind down its oil purchases from Russia. So Brent trading there at $62 a barrel, and the US 10-year yield at 3.95% as this US government shutdown continues. But let's get a look at how Asian markets are faring this morning. We can go to Winnie Xu in Hong Kong. But just a moment, we are going to come next to the oil inventories, and we can go next to Winnie Xu. So let's get to Winnie Xu now in Hong Kong. And now we're going to go, we are going to go back to the trade story and dive into that. The US President Donald Trump saying that a 155% tariff on Chinese goods will begin on November 1st. It comes as he says that a meeting with China's Xi Jinping would yield a good deal while tempering expectations.
I think we're going to have a very successful meeting. Certainly, there are a lot of people that are waiting for it. Maybe it won't happen. Maybe it won't happen. Things can happen where, for instance, maybe somebody will say, I don't want to meet, it's too nasty. But it's really not nasty, it's just business, and we're going to do a good job representing you people and representing the people of our country.
Let's get to our China correspondent, Minmin Lo now. Minmin, we keep debating who's got the upper hand in the US-China trade war. Should we take from the latest China trade data that the US just can't seem to live without Chinese exports? What does that mean for leverage?
Well, if you look at China's trade data, yes, it does seem like Chinese exporters are extremely nimble in shifting their trade flows and looking for alternative markets to reduce their reliance on the U.S. And when you think about what is on China's and U.S.'s wish list, it's semiconductors versus rare earths. And some analysts are saying that the U.S. needs rare earths from China more than China needs semiconductors from the U.S. And some are saying because of the resilient trade, maybe President Xi might be more willing to walk away from a deal if his conditions are not met. Because you think about what China wants, it's not just the high bandwidth memory chips, but the highest end semiconductors for that would be useful for its AI sector. And some are saying there are reasonable signs that maybe President Trump would be more amenable to loosening those trade restrictions than his predecessor Biden, right? Because Trump has so far been willing to cut deals with the likes of Nvidia, offering, allowing them to sell to China in exchange for a portion of their revenue. Of course, China also wants lowering of tariffs to be on par with other countries, and that means the removal of the fentanyl-related tariffs. That would require China to show more signs, even if symbolic ones, that they are doing more to remove or to curb the flow of these ingredients of fentanyl into the U.S., and perhaps maybe committing to buying some soybeans from the U.S. in exchange for lower tariffs. But there are really infinite ways that this talk could, turn out in the end. But President Trump certainly setting the tone for a very successful trade talk with President Xi, he says.
OK, and meanwhile, we've got China trying to calm foreign businesses that its rare earth export controls aren't going to be disruptive. Tell us more, Minmin.
Yes, clearly China is sort of trying to balance between threatening the U.S. with its rare earth leverage while also calming markets, and especially not to spook investors in China, because yesterday the Vice Minister of Commerce had met with an unusually large numbers of foreign businesses here in China, about 170 foreign businesses and foreign chambers in Beijing. And the message from the Vice Commerce Minister was that these rare earth controls are not meant to disrupt normal trade flows. And China will continue to work with countries as long as these are legitimate transactions in line with Chinese law. China will make sure the flow of rare earths will be smooth. So just within that message, there's also, what is unsaid is that sort of a veiled threat as well to these companies and these other countries, right? That China doesn't want to see the spillover effect to other countries. The message is targeted at the U.S., but at the same time, if other countries start to join the U.S. in this bandwagon to sanction Chinese companies, maybe they could face some delay in rare earths. And case in point is this Dutch chip company in the Netherlands that is owned by a Chinese owner, with the Dutch government seizing control of the company because of the expansion of this U.S. entity rules. China has been retaliating by placing export controls on that particular chip company in the Netherlands.
OK, Minmin Lo out of Shanghai, we thank you so much as we head towards that potential meeting between Trump and Xi Jinping. Now, I just want to return to those UniCredit earnings that we had out of Milan a few moments ago in the programme and just correct one of the numbers, a key number, in fact, and that is the net income. So it came in for the third quarter at €2.63 billion. The estimate was for €2.39 billion. But unfortunately, we had shown on the screen the incorrect number. And so just to remind you of the correct number there before we get trade on that later in the day. But let's also get to how Asia markets are faring with Winnie Xu in Hong Kong. Winnie, how's everything playing out where you are?
Morning. It seems like we're seeing a bit of a weakness in Asian stocks today, mainly dragged by some of the declines in the technology shares. But here you can also see that leading the region lower are the Hong Kong shares, and actually with the major index down over 1%. So there is still a lot of volatility when it comes to trading Chinese equities. We were just talking about how Trump on one hand say that he is expecting a good deal with China, and on the other hand saying that this meeting with Xi might not even happen. And And strategists are also quite divided in terms of how to trade this market, with Morgan Stanley and Nomura saying that not to buy the dip yet, while we just had this note from Goldman Sachs saying that the default mindset for Chinese stocks should be to buy the dip. Now take a look at what's going on in the Japanese markets, because we are seeing that stocks fluctuating a little bit when it comes to kind of trading after Takaichi got elected as the prime minister. We are seeing a bit of kind of profit taking here, and SoftBank here is that big drag when it comes to the dragging the index lower after Texas Instruments actually had a quite disappointing outlook. And also when it comes to cross asset, we are also seeing the yen strengthening just a little bit after weakening for the past 3 days. And it's also coming after how the new prime minister says that tackling inflation is one of the key priorities. Now, we are focusing a lot on what's going on when it comes to gold and silver globally, and we see a bit of that spillover effect into the Asian session as well. You see here Australia's West Gold Resources and also Japan's Sumitomo Metal Mining both down over 5%. So it is that sell-off going on across the globe. But for now, we are hearing from investors that they don't really see a contagious effect to go further, because it's mostly a profit take after a big rally. But we'll see how things go in the European session.
Rennie Shui, thank you so much out of Hong Kong with that update. Now, in the European session, we are going to be looking ahead to lots of the luxury names reporting, but we have seen L'Oreal shares dropping in New York after sales disappointed. US weakness outweighing signs of improvement in China. And we can get more now with Bloomberg's Angelina Rascouet out of Paris, who's watching all of these numbers for us. So, Angelina, disappointing growth overall last quarter for L'Oreal, it looks like.
Yes, indeed, that was the case. I mean, as you mentioned, the U.S. was pretty underwhelming. The CFO explained that in the U.S., L'Oreal tends to be exposed to makeup, which is a category that hasn't been super dynamic lately. And even though China recovered, they grew, it wasn't, I guess, enough to offset the weak U.S. performance. The CEO of L'Oreal, Nicolas Hieronymus, said he remains cautious on China. He didn't want to draw big conclusions from the third quarter numbers alone. He also said the beauty market overall in 2026 is expected to rise slightly more than in 2025, but again, remaining cautious. He was asked about Armani. Remember, L'Oreal has the beauty license for Armani, and it's a very lucrative license. And L'Oreal was named among the preferred bidders for an initial stake sale of 15%. And he said that even though they did a massive deal with Kering this week worth €4 billion, that will not prevent them from assessing and exploring their options when it comes to that Armani initial stake sale.
OK, I want to come back to Kering in just a moment. But first, we're going to get at 7 a.m. London time sales data from Hermes, Angelina. So is that likely to follow LVMH's strong lead? And what do you make of the choice of Wales Bonner to lead the menswear line, the latest in this wave of new creative directors?
Absolutely. I mean, Hermes tends to be amongst the most resilient luxury brands out there. I guess its customer base is wealthier. They buy, the exclusive bags that Hermes offers. And so we're expecting growth. However, in the past, we've been used to double-digit growth rates. This time around, we're expecting single-digit growth rate. Still expecting double digits at the crucial unit, which is leather goods and saddlery. We'll see what happens. Basically, analysts said they want to see what the quality of the growth looks like. And so far this year, Hermes shares are actually down, not because it hasn't performed well, but because, the market sort of assesses that it's sort of really highly valued. It's quite expensive. And when it comes to the nomination, absolutely. Hermes last week announced that their menswear designer who'd held that role for 37 years, Véronique Nichanian, who's 71, will present her last show this January. And yesterday they announced her replacement. She's 35. She's British Jamaican. Her name is Grace Wales Bonner. She graduated from Central St. Martin's about 10 years ago. She has her own line. She also did collaborations with Adidas. So, there's that sportswear affinity, I would say. So yeah, it'll be interesting, and it's part of the changing of the guard that we saw in the past year, with many new designers at Celine, Dior, Chanel being appointed. You know, during this downturn, we need new creativity. We need to generate desire again, and that's what you're doing. However, for Hermes, the new menswear designer, we will have to wait until January 2027 to see her new creations.
All right, Bloomberg's Angelina Rascouet in Paris, we thank you so much. As you mentioned, we are going to get the Kering sales numbers as well. That's at 4:45 p.m. London time. Of course, we've got a new CEO there as well, Luca Di Maio. But let's get back to the top story in markets, and that is what's been happening in commodities. Gold and silver have plunged from their record highs, with the yellow metal suffering its biggest intraday fall since 2020. Bloomberg's Valerie Teitel has been tracking all of this for us. Val, what's going on with gold? Is it just a bit of profit-taking, or is this the end of the rally?
Look, most people would say that we were due for a pullback. Gold has essentially risen 30% since the end of August, essentially in a straight line. So the first pullback to this rally happened yesterday. Gold at one point in the session was down over 6%. We closed 5% lower and are just scraping back just tiny those losses overnight and this morning. Now, it's interesting, Lizzie, it's not just gold that was impacted. Silver also saw a retracement. There was also a steep retracement in gold miners. A hotly tracked gold miner ETF, GDX, had its worst fall since March 2020, was down around 10%. So it does feel like some of these momentum trades are being at least cooled down for now. Let's see if that extends in trade today. But it was interesting that this pullback in this commodity trade didn't necessarily have any effect on risk appetite. The broader S&P 500 index essentially closed the session flat yesterday. The attention was more on the earnings that we got after the bell. A lot of disappointment out here, Lizzie. Let's start with Netflix coming out talking about a $600 million hit to operating profit to settle a lawsuit with the Brazilian regulator. So those shares fell off of that disappointment. So we missed on the top line because of that payment to Brazil. Shares were down 6.5% after hours. Now, what executives were trying to claim is that aside from this one-off payment, the results were actually very solid, mostly due to their most popular streamed series now of all time, K-pop Demon Hunters, which I am told by my producer is a must-watch. But executives also wanted to address shareholder concerns that AI-generated video is having an impact on their business. They said, if anything, it's seen the opposite in the last quarter, and that their subscriber engagement was at a record. We also had disappointment from a chip name from Texas Instruments. This one is showing that their turnaround in analog chips is not necessarily going as planned. These shares plummeted in after-hours trade, down 8.6%. This is now the second quarter in a row of a disappointing forecast from Texas Instruments. And Lizzie, we'll be watching the analog chip makers here in Europe at the Open, Infineon being the big one.
All right, Valerie Teitel, we thank you so much. Binge watching the K-pop as always, and Val will be back with us later in the programme. But coming up next, UniCredit's third quarter net income beating, and we're going to dig into those earnings. Coming up, this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's dive into those UniCredit numbers, shall we? Reporting third quarter profit and revenue that beat analyst estimates, giving a boost to the CEO Andrea Orcel after his unsuccessful bid for Banco BPM. We can get more with Lento Tang, who's been looking under the hood here, our senior bank analyst at Bloomberg Intelligence. If you're looking at these, I think they look pretty good, right?
Yeah.
Why haven't they upgraded their guidance?
The result was good, but that's more on the bottom line control rather than the top line.
Okay.
So revenue, as you said, 2% beat, but that is mainly driven by the trading revenue, which we kind of expected it because of good results from the US banks. So we expected trading to be good. If you look at the breakdown of revenues, NII is actually 1% miss. So I think that's kind of what the key line there. So currently consensus is saying the NII is going to bottom in the first half of 2026. So it's very important to see from the management comments on when the bottom will be. I think that will be the key driver. Now, speaking to the bottom line control, so cost and loan loss provisions are really good this quarter. So again, you will see whether that performance is going to continue or not.
OK, really helpful. Lento Tang, Senior Banks Analyst at Bloomberg Intelligence on those UniCredit earnings. But coming up on the programme, the CFO of Arm comments on the idea of an AI bubble and who might be the winners and losers. We'll get the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. And to tech now. Arm CFO says that the company is the CPU of choice in major artificial intelligence projects, from Nvidia to Oracle. Jason Child also told us that today's AI challenge is supply, not demand, and expects both failures and winners to emerge in the sector.
If you back up Stargate, I think they said it was going to be something like $500 billion of total spend over 4 years. As of today, we are the CPU of choice. So if you think of, say, Grace Blackwell, or even in the future, Vera Rubin, Grace and Vera, those are both built on ARM from NVIDIA. And then, of course, to the extent that, Oracle's also going to be contributing, that's certainly another partner that we could be helping. And then there's OpenAI. And, certainly there's, I guess, rumors of, custom efforts by them. And for the most part, most of the custom efforts, there's been a lot of discussion about using ARM-based CPUs to pair with those custom GPUs. So a lot of opportunity, and it could be significant.
The numbers, I mean, you mentioned 500 billion. Yeah. The numbers are kind of range from 100 billion to 500 billion.
Yeah.
Is there a risk that the revenues realized won't match some of those larger aims and larger aspirations? Possibly. We're not super close to the total spend in Stargate, but if you look at what the needs and uses are right now of AI, compute in particular, supply is far behind demand. And so at this point, I think the challenge is really just about, can you get the power, can you get the chips, and can you get the systems deployed? And so, with that kind of a demand cycle, I expect there's a decent chance that you'll see us at the high end of that. So on that point about supply not meeting demand right now, we've seen these incredible numbers, incredible deals across the infrastructure space from the hyperscalers and OpenAI and many others. On a promised future, but not fully realized yet, does it concern you? I mean, are we seeing an AI bubble?
Okay, so when I think about bubbles, I think about, I was actually at Amazon back in 99, 2000, when things were getting frothy, I think they said. What was interesting there is there was a bunch of build-out, but a lot of that build-out wasn't really being deployed, or it wasn't being fully utilized. If you think about all the servers, all the websites, the shipping capacity, et cetera. What's different in this cycle is the problem we have right now is supply, not demand. That was really more of a demand issue. This is really, right now, our challenge is supply. So I think the question is going to be, is there going to be a situation where you have a bunch of companies that probably have raised capital and maybe are pre-revenue? Is there a bunch of those companies that maybe won't make it out? So are they going to be the Pets.com or Home Grocer or Webvan or whatever? Sure, that certainly could happen. But are there also going to be the equivalents of Amazon, Google, eBay, Yahoo, these other companies that actually were, quite large and became, pretty huge companies? I expect that to happen as well. So how we define bubble and who's the winners and losers, I think that's all to be seen.
So that was the ARM CFO, Jason Child, speaking to our very own Tom McKenzie on the sidelines of Bloomberg Tech London. And we've got some significant tech earnings coming up today, not least SAP and Tesla, as we look at futures pointing higher stateside, but a touch lower here in Europe. Eurostoxx 50 futures down 0.4%. But coming up next here on Bloomberg Daybreak Europe, the much talked about summit between Presidents Trump and Vladimir Putin may not happen. We'll get you all the details on the geopolitics next, so stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The gold rout easing after suffering its biggest intraday drop in more than 12 years, while Asian stocks fall as the equity rally on Wall Street shows signs of fatigue. Elsewhere, Donald Trump says that his meeting with Chinese President Xi Jinping may not happen as the trade deal deadline approaches. The US president also casting doubt on a second meeting with Vladimir Putin. And UniCredit's profit beat. Italy's second biggest bank sees net income rising almost 5% on higher dividends, giving a boost to the CEO Andrea Orcel after his unsuccessful bid for Banco BPM. Well, a very good morning. If you are just joining us, it's just 6:30 a.m. here in London, and we're looking at futures pointing higher stateside but lower here in Europe. We've already seen a bit of fatigue in the Asian session. The MSCI Asia Pacific Index paring some of its earlier losses, now down just 0.1%. But if we flip the board over to the cross-asset picture, we saw these steep losses when it comes to silver and gold yesterday, the biggest intraday decline for gold in more than a dozen years, and this after what really has been a ferocious weeks-long rally. So traders seemingly taking a bit of profit. The rout showing signs of easing now, but the question remains, is this bull trend done? Now, partly the sell-off had come as the dollar rose on the positivity around the US-China trade talks. You can see euro-dollar on the up today at 1.16 and the 10-year yield at 3.9665 at the moment. The US government shutdown, of course, continuing. It's on the verge of becoming the second longest on record, and we have oil up for a second day as the president stresses that India is going to wind down its oil purchases from Russia. So Brent there at $62 a barrel. But let's get to the UK now, because the Bank of England governor is warning of parallels between the private credit boom now and the subprime debt crisis during the financial crisis. Andrew Bailey said that the alarm bells are ringing, and he was giving evidence to a UK parliamentary committee. This is after officials confirmed plans to stress test the private credit market.
We certainly are beginning to see, for instance, what used to be called sort of slicing and dicing and tranching of loan structures, for instance, going on. And if you're involved before the financial crisis and during it, the alarm bells start going off at that point. I sat in a session with people from the private equity and private credit world some months ago, who of course told me that everything was fine in their world apart from the role of the rating agencies. And I said, well, we're not playing that movie again, are we?
Let's get more now with Bloomberg's Valerie Teitel. Val, we heard cockroaches from Jamie Dimon, a canary in the coal mine from Andrew Bailey. Just the fact that everyone's talking about private credit, even if they choose different animals, show that these concerns are really building.
Oh, yes. Well, Bailey's comments yesterday, I think, adds fuel to those worries. He especially was concerned after the collapses of Tricolor and First Brands of the U.S., what that can tell us about the very opaque private credit market. And I think the thing that's concerning, at least for Bailey and the regulators here, is we still don't even really know the size of the private credit market. The latest estimates put the size of the U.S. private credit market over $1 trillion, but it's really an opaque sector. And I think the worry for the Bank of England and for Bailey specifically is that they really want to answer the question, if we get a shock to private credit, if we see substantial write-downs in these loans, is that a shock that is contained, or is it amplified like what we saw in the subprime crisis during the financial crisis? Now, Bailey is essentially saying that, look, we got it very wrong back in 2008. Everyone told us subprime would be contained. It ended up not being. It ended up being very amplified throughout the financial system. Essentially, they don't want a repeat of that. So that is why they're looking at these stress tests. We haven't gotten very many details on how they expect to perform them, but the details is that these are something they likely will be launching in the next 9 to 12 months, with details coming shortly. But essentially, this is really the Bank of England being on the forefront of these warnings. It was only a few weeks ago the Bank of England warned that there could be a sharp correction in the equity market due to stretched AI valuations. So they seem to really be on the forefront, at least, of worrying about drawdowns in the industry.
Well, we're going to pick up on that worry about about the stretched valuations later in the programme with our tech guest, but Bloomberg's Valerie Teitel, thank you so much for breaking it all down, as always. Now, President Trump says that he does not want to have a wasted meeting with Vladimir Putin, in a sign that the summit between the two leaders may not happen. The US leader has, however, reiterated his desire to see the current battlefield lines in Ukraine frozen as part of any ceasefire agreement that is reached. But that has been rejected by the Kremlin. So let's bring it all together. We can bring in Bloomberg's Russia economy and government editor Greg Sullivan. He's with us now for more. Greg, you've got the Financial Times reporting that this Trump-Putin summit is cancelled. Is it just in jeopardy? What's the latest?
Well, before this even, we had Russia really tamping down expectations for this summit. We heard that they would take challenging and work and a lot of preparation leading up to it. And now we have Donald Trump casting doubt on it himself. What seems to have happened is that Russia's foreign minister, Sergei Lavrov, held a call with U.S. Secretary of State Marco Rubio that was intended to plan on preparations for this intended summit. Obviously, the call did not yield much. There's no plans for the two to meet. But really what we have is Russia not really moving away from their maximalist demands. They've tamped down expectations for a ceasefire. They've thrown cold water on that demand from President Trump. They don't want a ceasefire right now. So it's unclear what, if the summit was held, President Trump would actually walk away with. So now President Trump is potentially reassessing the situation, realizing he might walk away empty-handed from yet a second summit with President Putin, and reassessing whether this can happen. Of course, things can change. We saw that President Putin was able to get Trump on the phone ahead of his Zelensky meeting. So again, things could change quickly. But as for now, there does seem to be a lot of doubt over what Russia is actually willing to offer, and if they're even ready for a ceasefire, barring further pressure.
Well, the Europeans, Greg, are preparing for a ceasefire. We have these latest ceasefire proposals from the European leaders to try to end the war. Just talk us through what's actually in this 12-point plan for peace.
Well, a few things. One, the plan does call for the conflict to be halted along the current lines of contact. Now, of course, that's something that Russia has dismissed. It's something that President Trump and the EU leaders are calling for. But again, that's one of the points of contention in leading up to a ceasefire. Now, should Russia agree to a ceasefire, the plan also calls for the return of Ukrainian children that have been deported from the country, as well as funds to rebuild Ukraine in the post-war reconstruction phase. Furthermore, it does address security guarantees for Ukraine. That will be crucial in any resolution to the conflict going forward, and something that Zelensky wants to keep on the agenda in front of Trump and on the minds of his allies. Again, one thing I would caution is that this envisions all of this after Russia agrees to a ceasefire. And as we know, with the summit now in doubt, it doesn't look like Russia is moving any closer to agreeing to a ceasefire, so it's unclear when all this will actually come to fruition.
OK, Bloomberg's Greg Sullivan, we thank you so much for the latest on that. And we can get to some other top geopolitical stories as well. Of course, Trump wanting the ceasefire between Russia and Ukraine because we have the ceasefire between Israel and Hamas. And the US Vice President says that he's still optimistic about the future of that ceasefire between Israel and Hamas, despite the flare-up in violence over the weekend. JD Vance says that the Gaza deal will require constant monitoring and supervision, but he will not set a deadline for Hamas to disarm.
I'm not going to do what the President of the United States has thus far refused to do, which is put an explicit deadline on it, because a lot of this stuff is difficult. A lot of this stuff is unpredictable. I feel very optimistic about where we are. Knock on wood, you never know how this stuff is going to go. But given what I've seen, given the incredible talent and effort that's going in to the reconstruction of Gaza, to the long-term security of the Gazans in that territory, I feel very good about where we are.
We also have the news that the US is planning to buy 1 million barrels for its strategic petroleum reserve, taking advantage of low oil prices. The Energy Department plans to buy crude for delivery in December and January, using a portion of the $171 million from President Donald Trump's signature tax and spending law. So those are some of our top stories worldwide. But coming back to the UK and its ambition to become a global leader in life sciences. It's being put to the test in Cambridge, where rapid development at its biomedical campus is really being hit by struggling local infrastructure. Despite major investments from companies like Prologis and the presence of pharma giant AstraZeneca, basic utilities like wastewater treatment are having problems keeping pace. And Bloomberg's Ashley Furlong has that story for us. So, Ashley, I haven't mentioned what we're really talking about here because it's a little unsavoury at this hour of the morning. It's sewers. Just talk us through what's actually happening here in Cambridge.
So the issue in Cambridge is that Anglian Water, the body responsible, or the private company responsible for managing wastewater in Cambridge, says they don't have extra capacity. But they're obliged to take things like from your household tap, from your household toilet. They can't say no to that. What they can say no to is trade effluent. Now, that's if you're a biotech company, a large pharma company, and you have a laboratory, and you have chemicals that are going down the pipes. They can say they're not going to take that. And at the moment, developers are telling us that they can't get guarantees from Anglian Water that they'll take the trade effluent from the biotech companies that are hoping to move to Cambridge or hoping to open new laboratories there. So it's really a blocker, and what we've seen is a blocker in the pipes. And what we've seen is just for example, in Cambridge have put massive tanks beneath their new building that they're developing there because they're just saying we need an alternative solution. We can't really rely on the wastewater company.
And it seems pretty symbolic of some of the other bigger infrastructure problems that this government is having, whether that's planning or finances. Is that a good characterisation?
I think very much so. It's also, sort of the wastewater problem is a problem across the UK. You'll know when there's heavy rains, the rivers might be flooded. In summer you might be worried about going to swim in the sea and worried that there's sewage in the ocean. So this is a problem across the UK. These private companies are responsible for maintenance of the facilities, for increasing capacity in the facilities, and we'll know the UK government has these massive plans for house building, and that's going to be putting extra pressure on these private companies who are saying, they just, they don't want to upgrade their facilities anymore.
So it's symbolic of a broader political story, but also we know that the Chancellor is really pushing for economic growth. To what extent are these sewer issues actually holding back investment in life sciences?
Well, there's concerns that what might happen is that companies might say, well, if we can't get these licenses in Cambridge, well, we might just go elsewhere. And we're already seeing, not necessarily, companies citing sewage problems, but we're seeing AstraZeneca saying that they're not going to expand their facility in Cambridge. We're seeing US company Merck saying that they're not going to continue with plans for a new research hub in London. So we're already seeing companies already saying, we're going to go to the US instead. And so the UK really needs to be providing an attractive alternative, which they're not at the moment.
OK, really helpful. Ashley, thank you so much for bringing us that story. And, of course, you can read it on the terminal today. Fantastic feature, even if it is a little unsavoury, Ashley Furlong, with our feature this morning. I just want to mark, as we inch towards the open here in Europe, it looks like L'Oreal is going to have a significant drop this morning. It's about 6% down on Tradegate at the moment. And this, of course, is after its disappointing sales numbers that we were discussing with Angelina Rascoway earlier in the programme. You've seen US weakness, even if there was a bit of strength in China, and so overall disappointment across the sales picture. So do keep an eye on L'Oreal shares at the open. We've already seen the weakness in New York in the numbers overnight. But coming up on the programme, is it the coming of age for European tech? We'll get to discussing that next with Tommy Stadlen, co-founder and general partner at global venture capital firm Giant Ventures. That conversation next. This is Bloomberg.
I think there's an opportunity that the UK becomes sort of and this might not be a very good metaphor here, but sort of the Delaware of content, where in the United States, Delaware created the laws that where everyone registered their company because the laws were so clear. If the UK stands up and says, we want the fairest marketplace for content providers and for new startup AI companies, I think that's the best way to encourage. Don't give the game to the people who won yesterday. Let people compete on the merits. And the best way to do that is to say you can't leverage the technical advantages that you had yesterday in order to bootstrap a monopoly in the future.
So that was the Cloudflare CEO Matthew Prince at yesterday's Bloomberg Tech Summit here in London. And there are some investors who believe that now is the coming of age for European tech. Among them, Tommy Stadlen, co-founder and general partner at Giant Ventures. I'm pleased to welcome you, Tommy, to the programme. I wonder just broadly why you're so bullish on European tech.
Well, thanks for having me. I've always argued that we have all the intrinsic ingredients to be a technology superpower. Here in the UK and in Europe broadly, we have, within about an hour of our headquarters at Giant in London, 3 of the world's top 10 universities, Oxford, Cambridge and Imperial, and they are churning out incredible AI talent that is every bit as good as their US counterparts. And what we're consistently seeing now is those talented engineers, those founders are going on to start companies that are finally having their moment in the sun.
Yeah, but when it comes to turning that talent into real money, if you look at the amount that's being invested, if I look at the numbers from ASML and SAP recently, billions of euros, right, to grow homegrown AI startups, it's chump change, isn't it, compared to the amount being invested in the US?
It is a tiny fraction of what's being invested in the US. So I think it's really important we understand where we can win and where we can't in Europe. So you just had the Cloudflare CEO on there. We're not going to win in AI infrastructure. We're not going to win in the data center race. There are hundreds of billions of dollars, trillions of dollars being invested into those infrastructure companies. We can't match that whatsoever in the UK. But what's fascinating now is we are in an era where a 2 or 10 person startup can create a business within a few years with hundreds of millions of revenue. We're seeing that consistently with companies like Lovable and others. So you don't need armies of people and you don't need armies of capital. And in fact, now one of the things we look at Giant when we're assessing startups is how lean can this team build? Do they need to build a team of 20, 30 people to really generate a great product and great revenue? Or can they use AI to scale much faster? You don't need huge amounts of capital for that.
OK, so we don't need to try and cover the entire supply chain. Which parts of it do you want to invest in then? Where is success going to come from in Europe?
Well, we're really excited about the intersection of AI and the physical world. So we backed, for example, a company called Cusp AI. Jeffrey Hinton, the godfather of AI at Google, his new company that he's very involved with. And they're using AI to create a search engine for novel materials that can help real-world problems. So smarter batteries, making carbon capture finally economically viable, working on chips and making them more energy efficient. So that's one example of using AI to try to make the physical world smarter and better. And what's nice about that is it plays to Europe's strength. We have these industrial powerhouses who are sleeping, who are struggling, but they can partner with startups to try and drive a wave of economic growth that we so badly need in Europe.
True. And when you've got everyone pouring money into this, whether it's Canada or South Korea or in the Middle East, is it that specialisation that's really going to make Europe and the UK in particular stand out here?
I think we do need to focus on our strengths, right? And so if you look at the UK in particular, you were talking about life sciences earlier. Despite Cambridge's issue with sewers, that's a world-class institution with world-class incumbent pharma companies. So we've got the pharma companies, we've got the finance companies here in the UK, so fintech's been a massive strength. If you look at Revolut, one of the generational companies coming out of the UK at over $70 billion now.
Yeah, but so still a question of whether it'll list in London.
Big question, and to be honest, that is the one missing piece of the jigsaw. We've got all the talent, we've got all the venture capital in the world. We're the third biggest centre now, London is, for venture capital globally. But the big problem in Europe is exits. And we never advise our companies to go public in the UK. It's just not a good idea.
Wow, OK. Well, I did want to ask you what you want to see from the Chancellor at the budget to try and turn that around.
Well, I think the UK, like other European economies as a whole, if you step back, we do seem to be stuck in a kind of high-tax, low-growth doom loop. And we're hearing rumours coming out this week of yet more taxes aimed at the income generators, if you will. And we've got to be really careful with that. We're consistently hearing in my small world of venture capital and technology of both founders. We hear about the Revolut CEO moving to the UAE, potentially to not have a huge tax bill here in the UK. Venture capitalists as well. We don't want to chase away those folks who are generating this innovation economy. So we've got to be really careful on tax, which is a basic thing. But I would like to see us be much more ambitious than that. How do we go and make the UK the most AI-friendly regulatory place in the world? Things like driverless cars. In San Francisco, 25% of ride shares now are on Waymo, driverless cars. Almost none in the UK.
But from the investor perspective, but what about all the fears about AI being a bubble? We had the Bank of England Governor Andrew Bailey warning that stretched valuations are going to lead to a sharp correction. Where is the froth, if we're being honest, in your view?
I'll say two things about AI fears. On the bubble, there is no doubt that it is a bubble. We are in a complete excess world of valuations, hype, all of those things. And the same thing that happened with the internet. There will be a lot of capital blown up, making bad investments. But there will be generational companies that come out of this and completely change the world. So I think the same thing will happen here. And in a way, bubbles can be good things because it can attract huge amounts of capital and get the infrastructure built. So we've got to be careful. You don't want to be left holding the baby with the bad ones, but there'll be generational companies built. The other thing I would say about AI fears, it was really interesting listening to the Cloudflare CEO on your package earlier. talking about the incumbent media industry and their fears of AI disrupting their business model. I spoke to someone right at the top of the UK government, and they said, we'd love to be the most friendly place for AI, but the newspapers won't let us do it because they are so anti-AI because they're afraid of what it will do to their business models.
The newspapers, not Bloomberg, Tommy.
Not Bloomberg, absolutely. But we can't allow incumbent media organisations to fearmonger on AI too much. We have to grasp it. It is our silver bullet in the UK to escape this kind of low-growth, high-tax doom loop.
Of course, balancing the risk and the opportunity, all important for the regulators and for governments around the world. Tommy, great to see you. Tommy Stadlen, Giant Ventures co-founder and general partner. Really good to have you on the programme. We've got plenty more coming up. Stay with us. This is Bloomberg.
Equity financing currently rank lowest among the funding sources that firms expect to use for green investment. Deepening and integrating EU capital markets is critical to support the large-scale investments that we need.
So that was the ECB President Christine Lagarde, and we'll be hearing from her again later in the day. But just time to bring you a few term charts to set you up for your trading day. And we've got to talk about gold because we've seen this ferocious rally over the past few weeks. You can see it here in the yellow line. It, of course, went past this $4,000 an ounce level. But if you look at this lower line, where this is the RSI, the Relative Strength Index, and you can see that since September here, we've been past the 70 level, which signifies overbought territory. So just dropping below that here. We saw the drop yesterday, phenomenal drop actually for gold and silver. Is this the end of the rally or is it just a bit of profit taking? We'll see in today's session. Pretty steady actually at the moment when it comes to gold. But flip the board over again because at 7 a.m. London time we're expecting the latest UK inflation numbers. 3.8% was the last figure. It's expected to take up to 4%, so twice the Bank of England's target. You can see here what we're expecting for September, and yet still more cuts priced for the Bank of England next year. Can this number at 7 a.m. change those bets? Flip the board one more time, and when it comes to equities, we've talked about momentum, gold losing a bit of momentum down yesterday when it comes to equities. Momentum, in fact, the worst factor in yesterday's session, despite a pretty flat day. Why is this important? Because momentum has been the factor behind the S&P rally so far, and if investors are getting burnt when it comes to their niche bets, what is it going to come to when they look at their core momentum bets as well? Again, another story, another question for today's session, but we've got some key interviews for you as well today. The Barclays CEO, CS Venkatakrishnan, will be on the opening trade at 7:15 a.m. This is Bloomberg.